The report also found that extreme weather events like hurricanes, wildfires and floods are already causing substantial economic disruptions and could trigger a financial market shock in the next decade. For more on this, we're joined by Linda-Eling Lee. She is founding director of the MSCI Sustainability Institute. Linda, great to see you here at COP29. Welcome to the conversation.
Great to be here.
Tell me a little bit more about this survey, what investors are actually pricing in here and what this financial shock that your survey is talking about could actually look like.
Well, we recently conducted this survey, and the global investors are really united on the fact that they're quite concerned about the impact of physical risk. Now, the problem is that today our financial modeling is not able to incorporate all the potential physical risks that are going to impact their assets. So I think that investors are quite worried about that. Now, they're also quite interested, we know, in working with the largest financial institutions in the world in investing in the transition. So I think that there are a lot of opportunities. The energy transition is happening. So there are these two kind of competing instincts in terms of managing the risk as well as really finding the opportunities in the energy transition.
And it's been really interesting as well to look over this survey, to look over this report, just to get a pulse check and a status update when it comes to corporate commitments to net zero. How would you say that industry globally, or at least within those companies that you're tracking at MSCI, are shaping up right now?
Well, let's step back. So in terms of the listed companies in the world, they contribute about 20% of global GHG emissions. And we've also now looked at the unlisted companies that are held in private equity, private credit, and infrastructure funds, and they might add another 12 to 15% to global emissions. So private sector action and company action actually really matter quite a lot, and that is what a lot of financial institutions are focused on. Now today, what we see is that only about 11% of them are on track to be keeping their emissions trajectory under 1.5 degree rise. So that's really leaves a substantial portion of the investment universe where investors need to be targeting in order to decarbonize their portfolios. So that is an issue, but we do see continued progress. I mean, companies are actually committing more and more. Like there are more climate targets that are being set by companies. We are seeing a lot more progress by developed markets companies than emerging markets, and now really emerging markets is where the focus needs to be in terms of decarbonization.
Right, so why are we only seeing 11%? I'm quite surprised by that number. That's low single digits. What's the gap and what's the holdup?
Well, I think decarbonization is hard. I think that a lot of companies actually, when we looked in the 6 years following the Paris Agreement, a lot of companies were actually making substantial progress. But I think that as the energy system, continues to be slowly transitioning, it is harder for companies to actually be, getting those kind of low-hanging fruits in terms of energy efficiency and other kinds of operational efficiency. So I think that is a serious issue. The other is that emerging markets, the countries themselves as well as the companies in them, continue to grow substantially in terms of their emissions, and that's really has not really abated very much. And I think that is now contributing more to global emissions than developed market companies.